It's September 13th, 2025. Cardano's price teeters at a pivotal juncture. After a patient grind higher, ADA has crept up to the 93-cent zone. And the question on everyone's mind is, can it burst past $1.16? In this thriller-like market saga, three forces converge. The sharks in the deep whale demand, the patterns on the chart, bullish technicals, and the leveraged longs lining up their bets. Each tells a part of the story, with clues hidden in on-chain data and market stats. According to on-chain analytics, wallets holding between 1 million and 10 million. ADA, the whale class, added over 20 million ADA in the last 24 hours. In fact, Binance's research arm recently noted that these large players had accumulated roughly 150 million ADA over the past 2 weeks, as if signaling this is the moment to buy. Such concentrated buying pulls massive supply off exchanges and into long-term holders' vaults, tightening liquidity. In bullish fashion, fewer coins for sale can fuel rallies when retail or algorithmic traders chase price higher. Yet this same whale demand creates suspense. Experienced whales are known to sell into strength, meaning they could unload parts of those stacks on a short-term rally. In other words, a sudden surge in whale buying can ignite a breakout. But if a DA stalls or falters, those same holders might exit and turn the tide. One analysis even cautions that distorted sentiment, nearly 77% of ADA traders long on some platforms, could backfire. If ADA fails to hold around 85 cents, those leveraged longs could be crashed by a pullback, triggering widespread liquidations. In short, whales buying is a bullish hint, but it also sets up a trap if things go awry. Above this, the technical chart sketches a rising tension of its own. ADA has been climbing inside a well-defined upward channel, carving higher lows since late summer. Traders eyeball 93 cents as the next looming test, in fact. This level coincides almost exactly with a 61.8% Fibonacci retracement of the prior move. Breaking above such a fib level is often seen as the green light. Analysts note that a daily close above 93 cents would likely point to $1.02 as the first target, which aligns with the 100% fib extension at roughly $1.019. And beyond that, if momentum truly takes hold, the fib 1.618 extension near $1.166 looms as an upside target, essentially an extrapolation of this rally. Indeed, a recent TradingView chart shows 0.9 to $86.93 as the fib 0.618 pivot, $1.0193 as eFib 1.000, and $1.1661 is fib 1.618. Highlighting how these math-based levels align with the narrative, on-chain analysts even highlight those exact zones, a confirmed close above. 93 cents could send ADA shooting toward $1.019 and even $1.166. Complementing this, other indicators are also hinting bullishness. Moving averages are curling up, and some traders point to a golden cross on the shorter time frames. Yet as every thriller teaches us, the darkest moments also hide traps. If ADA runs headlong into 93 cents and fails to break it, the entire scenario flips. A rejection there would not only confirm the resistance, but likely slam down toward key supports. One on-chart analysis marks roughly $0.813, $0.814 as a critical support zone. In fact, one TradingView idea explicitly pegged $0.813, $0.81 for dollars as a buy zone, meaning that if ADA peels off, it could sink back to mid-$0, 80 south before bulls might step in. Below that, the next stops could be much lower. A Binance analyst warned of a breakdown into the $0, 70 south, if the uptrend falters. Simply put, the chart shows both promise and peril. On the upside, momentum above 93 cents, plus volume expansion, would lock in targets like $1 and 2 cents. But on the downside, failure near the fib could trigger a sharp drop back to last month's lows in the high $0.70. The RSI is still neutral, not yet overbought. But any break of the ascending channel or key moving averages, the 50-day and 100-day lines, could flip the bias overnight. Meanwhile, the derivatives markets are like tinder waiting for a spark. Traders on Binance and elsewhere have piled into ADA futures with heavy conviction. Current data show that roughly 72 to 77% of ADA perpetual positions are long. One Coinatag summary notes that longs represent approximately 72% of derivatives exposure versus 27.6% shorts. This means the bullish camp far outnumbers bears. On platforms like Binance's ADA USDT, Perpetual, the long-short ratio is about 3.4 in favor of longs, roughly 77% long, per Binance's own report. Such lopsided sentiment also shows up in funding rates. Funding on ADA perpetuals has stayed mostly positive, longs paying shorts as bulls add leverage. In fact, CoinGlass data indicate that a DAS open interest-weighted funding rate turned positive in early September and has remained positive plus 0.0079% as of September 8th. Reflecting the tilt toward longs, open interest itself has jumped. As of September 13th, ADA futures OI stands around $1.92 billion, roughly 3.7% higher than a day prior, signaling fresh money flowing in. Rising OI alongside price usually confirms a trend, since it means new contracts and new capital are entering rather than just old profits being cycled out. In bullish terms, this aligns with the whale accumulation. Heavy new futures positions and rising funding suggests traders are piling on, expecting a rally. For example, the Binance report noted long accounts dominated with 77%, and that this creates a bullish pressure. But heavy leverage is a double-edged sword. The very long bias that suggests conviction can quickly turn into a cascade of stop-loss liquidations if ADA reverses. If the price slumps, those 70% long positions become sitting targets. A sudden pullback would force stop hunts. Longs would be ejected with shorts getting paid, and the momentum would accelerate downward. The Binance author warned that if ADA can't maintain momentum above 85 cents, the vast wave of bullish bets could come crashing down, causing a massive liquidation and a collapse. This is the inherent risk of crowding one side. It amplifies both directions. Even though funding is mostly positive now, indicating bullish lean, a flip to negative would be an early red flag that the market sees more downside. Traders should watch CoinGlass for clues. So far, the funding rate's positive bias supports the bullish thesis, but a sudden dive back into negative territory would underscore danger in cinematic fashion. These three forces are entwined. If whale demand continues to drain liquidity and the chart finally breaks above 93 cents, the leveraged longs will be vindicated in a rush of bullish momentum. ADA could soar through $1.02, the first Fibonacci target, and if the breakout conviction holds, even extend toward that $1.166 region. A bounce above 0.93 on heavy volume could ignite a classic short squeeze. As those 72% longs cheer on while short sellers cover en masse, open interest rising would confirm new bulls stepping in, and positive funding would keep fueling the move. In that scenario, the chart's supply zone, around 93 cents, becomes a launching pad. But if the narrative cracks, say ADA falters exactly at $0.93 or fails to stay above $0.90, then the consequences flip. The bulls lose confidence, whales might hesitate on further buys, and the technical door slams shut. All those leveraged long positions become flashpoints. Their stops could drag ADA back towards $0.814 or below. A breakdown from the ascending channel would solidify that loss of structure. Even the ascending fib strategy fails. The measured targets dissolve, and the focus snaps back to supports. As Binance analysts noted, a failure to overcome that key barrier at 93 cents could unleash a pullback that could be ugly, dropping down to 70 cents. In such a bear twist, funding would flip negative. Open interest could drop as longs bail, and whales might even quietly distribute. In this high-stakes drama, no one plotline guarantees victory. Whale accumulation adds fuel to the fire. But it doesn't write the ending alone. The chart patterns and order flow matter too. Likewise, even a textbook breakout on the chart can be derailed by a leveraged liquidation event. What we do know is that all three drivers are lining up toward a climax. Heavy whale buying has crowded the long side. Technical levels have pinpointed 93 cents as the inflection point. And traders are either betting big on a rally or sitting on the opposite side, ready to hammer the sell button for now. The headlines and data have tipped bullish. Major addresses are hoarding ADA. Fibonacci targets are being eyed, and futures traders are overwhelmingly long. To fulfill the bullish scenario, ADA must break and hold above 93 cents on strong volume at that point. The chart suggests $1.02 is within reach, and even the $1.16 zone is in play. Meanwhile, risk managers will be watching the flip side. Any failure at that resistance, or a drop back under $0.85, could spark a swift reversal into the mid-$0.70 south.